Right. A very good evening, all of you. Vanakkam, Vandanam, Assalamu alaikum. Aibowan. I hope you guys are having a very good time and thanks a lot. We've got 62 participants joining us today for the free paper class. So I think maybe half of it would be my existing students, and then we've got some new people. So I welcome all of you for this beautiful session. So before we get things started, I would like to make a few things confirm from your end. Am I audible and am I visible? Can someone quickly give me a message on the chat box? Am I audible and am I visible? Yes, thank you, thank you, thank you. Perfect, perfect. Yes, so guys, without wasting any time, let's have a very quick tidbit on how this class is going to work going forward. So my plan is to do 10 paper classes free of charge. And then with that, you would be able to decide whether to stick with me for the full revision program. So basically, this is kind of a preliminary classes that we are going to do for us to get things started with the revision. So basically, we are planning to do 10 classes free of charge. So we are starting from the moderate level papers and we are going to work our way up. We got to work our way up, as in we are going to start from the easiest paper and we are going to like travel along. And as we travel along, basically the difficulty level of papers are going to be like super high. Okay, that's how it's going to go. So I did share the paper with you last, I don't know, maybe a couple of days back, or I think yesterday. I hope all of you might have attempted it. And then again, you all might have found it kind of an easy paper, right? But hopefully going forward, you'll get even more difficult papers. So let me share the screen with you. And without wasting any time further, let's get things started. Okay. So, right. Which one of the following statement clearly describe the basic objective of accounting? So guys, you guys know this is kind of a very straightforward question, right? More often than not, yeah. More often than not, give me a minute. Let me quickly switch back. Give me a second. Give me a second. There was a small malfunctioning. Right. Okay. Let me share the screen one more time. So guys, more often than not, I think 90% of the time, not just in your term test, even in your final paper, the first question is going to be based on the definition of accounting. Inevitably, this is going to be the first question. Trust me. Okay, you can take my word. I'll keep the nick of my ear on this. Okay, because no matter what question paper that you are about to get started with, trust me, this is the first question that you're going to get tested with. Basically, that's the objective of accounting. So most of you might know the objective of accounting, but again, let's have a very quick recap, right? Basically, this class is all about recapping whatever that we have been learning since day one, okay? Since the start of our first year, right? So let's get started. Let me switch to my secondary camera. Okay, I hope my secondary camera is visible. Let's get back to the board now. Right. So guys, most of you know what is accounting. Okay, we are not going to waste a lot of time walking through this tangent. Most of you know what is accounting, right? So accounting, simply we can sum up the definition of accounting in 3 questions. We can literally sum up the definition of accounting in 3 questions, in 3 gateways, right? So basically, the first question is going to be what? What are you providing? And to whom are you providing it? And for what sake are you providing it? So basically, there are 3 questions you got to ask yourself, okay? What are you providing? And to whom are you providing it? And why should you provide it? So basically, with unanimous consensus, we all can agree that we are providing none other than information. What are we providing? We are providing information. To whom are we providing? Right? Do you mind blasting the chat box? To whom are we providing the information? Yes, keep going. Right. Awesome. Awesome. Right. We are basically providing it to the stakeholders. Stakeholders are synonymous to interested parties. So generally, the examiner might use either the term stakeholders or the term interested parties. So we are providing information. To whom are we providing it? We are providing it to the interested parties. And why such information is provided? So that the interested parties will be able to make decisions, right? So this is basically the definition of accounting. Again, we don't want to ponder over this a lot. If I'm to like take about 15 minutes and explain this to you, I know definitely you might get bored and leave off the class, right? So what are we providing? We are providing information. To whom are we providing it? We are providing it to the stakeholders. And why such information is provided? These types of information is provided so that they can make economic decisions, right? So as far as this information is concerned, all of you know, information that we provide are of two types. Information that we provide are of two types, right? We've got financial information. We also have information that are of non-financial nature, right? So we provide two kinds of information. We provide information that are of financial nature. We also provide information that are of non-financial nature. So what is the difference between financial information and non-financial information? You guys know, when there is a piece of information, okay, that is given to you, and if that piece of information is attached to a monetary value, if it is attached to a rupee value, it's financial information. So, right, let me take this marker, right? Right now, I'm giving you an information, okay? I'm telling you, bro or sister, I got this marker by paying 50 rupees. Right now, what am I doing? I'm providing you an information, right? What am I providing you? I'm telling you that I got this marker for 50 rupees. Right? The information that I'm giving to you right now, it has a rupee value attached to it. Think about it. The information that I'm giving to you right now, it has a rupee value attached to it. How much is it? 50 rupees. I'm telling you that I bought this marker for 50 rupees. So is that a financial information or non-financial information? It's basically financial. And then I'm going to twist the same scenario, but right now I'm going to give you an information that has got nothing to do with financial, but an information which is non-financial. Okay. I'm telling you, I have been using a number of markers. Let's say I used Atlas, I used Mango, and I used Sigma. I have been using a number of markers. Out of all the markers, this marker is the best marker. Okay. If I'm to tell you, out of all the markers that I have been using, this marker being the best marker, what does that mean? Here, I'm giving you a non-financial information. Here, I'm giving you an information that is non-financial. Why? Because it has got no rupee value. I'm not talking anything related to money. I'm just telling this being so far the best marker. Do you understand? So initially, I told you, I bought this marker for 50 rupee. That information got rupee value in it. Therefore, we got to categorize that piece of snippet as a financial information. Do you get what I'm saying? Secondly, I told you, so far out of all the markers that I have been using, this being the best marker is basically an information which has no rupee value in it. Therefore, that's non-financial. Did you understand? Right? Perfect. Yeah, Umair Faisal, sir, users also will come. Yes, exactly. Very good. Very good, Umair Faisal. I'll take that as well. So Umair is basically adding on to something that I taught you. Even users of information can also be considered as a synonym for stakeholders. So thank you, Umar Faisal. Appreciate it. Very good. Very good. Well done. Right? So there you go. What are we providing? We are providing information. To whom are we providing? We are providing it to the stakeholders. And why such information is provided? It is provided so that they can take economic decisions. Right. Now these interested parties, you guys know, these interested parties, we can categorize them into two types, right? We have the internal stakeholders. We also have the external stakeholders, right? We have the internal stakeholders and we also have the external stakeholders. So who are internal stakeholders? Internal stakeholders are basically group of people that exist within the business, right? So I would say basically the managers. Managers, do they stay inside the business or do they stay outside the business? Obviously, managers stay inside the business. Think of Elon Musk. Okay, he's basically the CEO of Tesla. We've got Elon Musk, who is basically the CEO of Tesla. So does he stay outside the business? No, not really. He stays inside because he need to make all the decisions with regards to the affairs of the company. Do you get what I'm saying? Then you've got employees, right? We've got employees. Even employees, do they exist out or do they stay in? They stay in. So these people are internal stakeholders. And when it comes to external stakeholders, we've got a bunch of people you might know. We've got customers. Okay, we've got potential investors, right? And then we've got the government, and then we've got banks or ideally the lending institutions. All these group of people fall under external, right? So yes, Aisha, even board of directors basically is part of internal. Like basically when it comes to managers, we have 3 levels of management, right, Aisha? We have the lower level management, we have the middle level management, and then we've got the top management. The top management is basically the board of directors. We have the CEO, chairman, CFO, all these people, they fall into the board of directors, right? So that's a very quick recap on the introductory definition of accounting. I hope you guys understood. So without wasting any time, let's quickly discuss the first question and get our answer. Okay. Right. What do we got? Which one of the following statement clearly describes the basic objective of accounting? So let's go through it. Let me quickly zoom in. Okay. Right. Which one of the following statement clearly, okay, clearly, wait, just give me a minute. There's some malfunction going on in the tablet. Right, I hope it works now. Right. So, right. Which one of the following statement clearly describes the basic objective of accounting? Okay. So some of you might have gone ahead with the first tangent. What is it? To provide information about the business. No, to provide financial information. Okay, to provide financial information about the business to stakeholders in order to take decision. Is this statement correct or wrong? What do you guys think? What do you guys think? Close and reopen. Okay, give me a minute. Right, just guys, just ponder over what I just told you. Let me just restart with the application. There is something wrong going on. Give me a minute. Okay, guys. So extremely sorry. There was a small skirmish going on with the app that I was using. Hope you guys don't mind me. Right. So what are they asking for? They are asking for the basic objective, right? Describe the basic objective of accounting. So that's basically the question. Okay. So let's see what was your answers, right? We've got someone saying answer number 1, answer number 4, again 4. Right, correct, wrong, correct, wrong. Very good. I think Umair, you have given a beautiful answer. Sarah Ali, she says 1. Then we've got 4, 4, 4, 4. We've got Zara saying 1, 1, 1, 4, 4, 4. Okay. We've got some people saying 1 as well. Right. Let me tell you. Those of you who said 1, okay, those of you who said 1, I'm extremely sorry. Your answer is wrong. Okay. You can't consider option number 1 to be your answer because they are only talking about the financial information. What did I tell you? What did I tell you? What types of information are we giving? We are giving financial information. We are also giving non-financial information, guys. You can't just stick to one piece of snippet. You see, this is how the examiner might trick you. Do you get what I'm saying? Sometimes the examiner might try to trick you by, giving you one piece of a snippet while making sure that he keep the rest of the tangents hidden. So you got to be like very careful while reading the question. Here, although it seems as if this being the answer, it's not. The reason being, they are only talking about the financial information. To provide financial information about the business to stakeholders in order to take corrective decisions, it's wrong because we are giving both. We are giving financial information. We are also giving non-financial information. So is question number 1 is correct? No, obviously. The option number 1 is wrong. And then second, to identify, record, classify, and summarize transactions of a business. Again, guys, that's basically the function of accounting. We've got to do that probably next week. And then third, to provide analytical information required to managers. Again, we are not only giving information to the managers, we are providing information for all the people, like for all the stakeholders, top, right, left, center. Okay. Then the fourth option that we got, obviously that's going to be your answer. What are we giving? We are providing economic information, right, related to business to all the stakeholders in order to take decisions. So guys, keep in mind, economic information kiyanne both financial and non-financial. Economic information kiyanne both financial and non-financial. So guys, be very careful. Don't be hasty and don't try to jump the gun and give the answer out of, hastiness. Make sure that you go through all the options given and choose the correct answer. So obviously, the answer for the fourth question, not the fourth question, the first question is going to be the fourth option. Okay, so that's basically the answer for the first one. Let's move on to the second one. State whether the following statements are true or false as to role of management accounting and financial accounting. Okay, let's again fall back to the board. Yeah, very good. I think Sharu, very good. Very good, Sarah. Very good, Rishda. Very good, Tangachi Rishda. Okay. We've got Rizma. We've got many people answering. So I'm sorry if I have overlooked your name. Do not get me wrong. Let's go back to the second tangent that we got, which is basically management accounting and financial accounting. So guys, again, management accounting and financial accounting is also an area where most of the time the students get tested with. If you take the past paper, right, just do an analysis on the past paper. Just go through the last 10 years of past papers. More often than not, they will always try to ask you questions regarding management accounting and financial accounting in question number 31. Question number 31 is basically like always, it's always about financial accounting and management accounting. So guys, when it comes to financial accounting and management accounting, most of you might know the difference between these two strands that you got in accounting, but let me quickly give you a walkthrough on this as well so that we can conclude the second question as well. Right. We have financial accounting. We also have management accounting. So who's a financial accountant? You guys know financial accountant. Let's say we are living in 2024. Obviously, we are living in 2024, aren't we? Okay. So let's say this is 2024. Let's say you are the financial accountant of a particular company. You will start your work from January 1st. You'll start your work from January 1st. And until 31st December, all that you do is recording. This is what you do, right? You start from 1st of January and until 31st December, you don't do anything except recording. That's what you do. You keep recording over again and again and again. The same thing gets repeated on a daily basis, right? So you come to office, you sit in front of your laptop, and all that you do is recording. And what do you guys record? You guys know, right? We record transactions and events. What do we record? We record transactions and events, right? So we start from the beginning of a particular financial year, and until the end, all that we do is recording, right? And towards the end of the year, what do? We prepare a report. Towards the end of the year, what do? We prepare a report. And then that report is known as financial statements. This report is known as the financial statements. Okay. So this financial statement, if let's say you are working for a company which is listed, you guys know what is a listed company, right? You guys know what is a listed company. Listed company is a company that is listed on the share market. A company that is, in simple terms, registered in the share market. Okay. If a company is registered in the share market, it can have that charter next to its name, PLC, Public Limited Company. Okay. So if a company is a public limited company, they must prepare their financial statements and they should upload the financial statement in csc.lk. They must, okay? They must upload the financial statements in csc.lk. Why are they publishing it? Like, why do they need to upload the transaction and events of a particular company in an open website? Even you and I can get into this website and go through the financial statements of public limited companies, right? Let me take the most popular company all of you know. We all know about Cargills, right? We all know about Cargills, okay? So Cargills, the financial accountant of Cargills, will record all the transaction and events of Cargills with regards to 2024. And then towards the end of the year, he will prepare the financial statements. So there are 5 types of financial statements. We've got SOPL, SOFP, SOCF, SOCIE, notes, policies, and disclosures. You guys know that, right? So there are 5 statements the financial accountant of Cargills PLC prepares. And towards the end of the year, he has to upload this. He has to upload this, right? Upload this in this website, csc.lk. In a minute, I'll show you how the, report is prepared and all. I'll just show it to you into your vivid eye. So this statement is given for internal stakeholders as well as external stakeholders. You guys know that. This statement is provided both for internal parties as well as external parties. So guys, answer me. Who are we? Are we the stakeholders of Food City? Are we the stakeholders of Food City? Do you agree we are the stakeholders of Food City? Yes? Okay, who are you? Oh, basic, perfect. You are the customer, right? So we all are customers of Cargills, right? We don't own shares in Cargills. We are not the owner. We are not the banker. We are not the government. Who are we? We are customers, right? So now, if I'm telling you the truth, if I'm a truthful person, if I'm telling you the truth, this statement of Cargill's, it should be available for us as well. Think about it. If I'm making a correct statement, this statement of Cargill's, it should be available for us as well, because they are telling this statement is provided for both internal and external. So who are we? We are also stakeholders, right? What do? We go and at least we get a pan geddy in Food City, don't we? Or else we get some vegetables from Food City, right? So we are customers. So are we able to get access to the financial statement of Cargill's? Yes or no? Fair point. Okay. Are we, like, do we have access to the financial statements of Food City? What do you think? Right. So let me show you. So guys, all you got to do is to type out. Okay, just type out annual report Cargill's 2024 Kiela. Then it will take you to the statement. Okay, can you see Cargill's? Okay, Cargill's Ceylon, and this is basically the financial statement of Cargill's for you to refer. Can you see OMG? Right? They have given you all kind of information. Being a customer, you are able to get access to this. So I wasn't lying to you, okay? I wasn't lying to you. So a very quick recap, and also to make things a little spiced up, I took you all over here for you to understand how things really work. Okay. So guys, it's true. It's true. Okay. It's not a lie. Basically, the information is available to us as well. Being customers, we are able to get access to the financial statements of Cargill's, right? Perfect. So what is the second tangent that we got? We basically use past, if not historical information. So this is something you guys already know, right? What do we include in this financial statement? Are we going to include something that is going to happen in 2025, or are we going to talk about the things that has already been taken place in 2024? Are we talking about the future, or are we talking about the past? We are literally talking about the past. Do you get what I'm saying? We are not going to be foretelling or forecasting the future. 2025, no, we have got nothing to do with it. We have literally got nothing to do with 2025. All that we do is basically recording whatever that has already taken place in 2024. So we are literally dealing with the historical information. And then the third point, which is basically, right, what is it? We need to follow rules and regulations. We need to follow rules and regulations. So what are the rules and regulations that we got? You all might have learned in chapter number 5, accounting concepts. Okay. Then we have principles like aggregation, desegregation. These are the stuffs, yeah. And then we have something called accounting standards. We will be learning this probably in your second year, right? So you are basically bound by rules and regulations. Trust me, if you talk to a financial accountant, trust me, I was able to serve about 6 companies during my life as an accountant. During my corporate career, I used to mingle with financial accountants. Okay, they can't think out of the box. They can't think out of the box. Like their thinking is limited because they always go based on rules and regulation, right? And then, information is provided for a specific period of time. Information is provided for a specific period of time. On the other side, we have management accounting. Answer me. I want you to twist your answer and give me what you know, right? In the financial accounting, we provide information for internal and external. What about management accounting? Very good. Very good, right? It's only internal. It's only internal, right? What about the second tangent? Here, we provide information which is basically past or historical. Over here, very good, Rakaya, very good. Very good, Mahdi. Well done, well done. Appreciate it. Appreciate it. Very good, right? It's historical, which is past, and budgeted. Budgeted can also be known as forecasted. Okay, budgeted information and forecasted information. And let me help you out with the third point. Rules and regulations are not applicable. That's easy, right? So I just quickly got that done. And when it comes to fourth tangent, is it for a specific period of time or is it when it is required by the management? No time? What do you mean no time? I have no time. I need to go back home and sleep. So let me go. Every time needed, required by the management, when required. Exactly. That is the keyword that you should use. Huh? You can't be saying like no time, yes time. No, you need to be like very accurate with the terms that you use. It's when required by the management. When required by the management. Guys, sorry, I wish I could explain management accounting to you as well with some good examples for you to keep it in the back of your head. Time is of the essence. Okay, so let's not waste any time further. Let's get started with the second question. State whether the following statements are true or false as to the role of management accounting and financial accounting. Okay, accounting is providing financial and non-financial information to stakeholders to take decision. Is it correct or wrong? What do you think? True or false? Right. Obviously, we just learned it, right? We just learned it. It's true. Okay. Management accounting information area is greater than the financial accounting information. Yes, it's true. I'll tell you why. I'll explain you the B part. Don't worry. I'll explain you the B part. Financial accounting information can be used for internal reporting purposes. What do you think, guys? Do you think C is correct? Okay, we've got some people saying no, false. Okay, many false. Farah, good. Nope. True. Very good, Ashraf. Very good. Yes, no. Yes, no. Okay. We've got many people got things confused. Okay. I'll tell you. Don't worry. For the time being, financial accounting information can be used for internal reporting purposes. Yes, it's true as well. Okay. And management accounting provides general purpose financial reports for the use of managers. No. Is it general purpose? No. General purpose kiyanne what? General purpose kiyanne financial statements that we provide. Okay, that's general purpose. So is this statement correct or wrong? It's wrong. So your answer is going to be true, and wrong. Let me explain you B and C for you. I know most of you would have got the B and C part confused. Okay, management accounting information area is greater than financial accounting information. Okay, listen to me very carefully. Now, I told you the scope of the financial accountant. The job role of financial accountant is pretty boring, guys. It's a boring job. I'll tell you. If you ask me to work for you as a financial accountant, I will never say yes. I hate that job. I hate being a financial accountant. But then again, this is a very subjective opinion, something very, very personal. I don't want to impose my mindset to you. But the reason why I hate this job, because you see, you just do the same damn thing over again and again and again. You don't have a life. All that you do, record, report, and repeat it. Record it, report it, repeat it. Record it, report it, repeat it. Record it, report it, repeat it. Did you understand? You keep doing the same damn thing, man. You get what I'm saying? I don't know, there is no brainstorming, there is no any challenge that you take over, right? No any risk, nothing. All that you do is you keep doing the same damn thing different years. And come on, what is so exciting? What is so exciting, that you got in it? So the scope of the financial accountant is very limited. He just do only one thing. What does he do? He just prepare the damn report. Sorry for the bad language, but then again, I'm just trying to emphasize, So I'm basically, it's a language technique. Okay. So he's just preparing the same damn thing over again and again and again and again and again until his last breath. Imagine doing that for 50 years straight. Imagine preparing the same report 50 years straight. You'll die out of boredom. Especially Gen Z, you guys will never become a financial accountant, I believe. And on top of that, guys, financial accounting can get automated. Then again, I'm not very sure with my statement. Like, I just want to be like pretty careful with my wordings. But then again, this can get automated because AI can replicate this easily. But when it comes to management accounting, let me tell you some of the things he does, right? He does investment appraisal. This is one of the things he does, right? And then he does budgeting. This is also another thing he does, right? He does costing. Okay. He does pricing. Okay. And then he does, right, short-term survival evaluation. Okay. And he does performance evaluation of departments. Trust me, he does a lots of works. He does a number of works. So his area is wider, right? He does a lots of works. So his area is wider than this guy. He just stick to one particular job. Whereas a management accountant does a lot of things. So in that sense, statement C, is that correct or wrong? Right? Statement C, financial management accounting information area is greater than financial accounting. It's correct. And C, financial accounting information can be used for internal reporting purposes as well. Obviously, right? The answer is very simple. Can you see? Financial report is given for external parties and it is also given for internal parties. It is given for external parties and it is also given for internal parties, which means it can be used for internal purposes as well. It can also be used for internal purposes as well. I hope you got it, right? Let's move on to the third question. So yes, I think Umair is saying, I agree with you, sir. Financial accounting can be automated. To be honest, by now there are enough and most of tests. Yeah, it's very true. It's very true, Umair. Okay. Sir, what about the A part? Nuha Al Imtiaz. So is that Nuhal Imtiaz? A part, accounting is providing financial and non-financial information to stakeholders to take decisions. Basically, the definition of accounting, Nuha. I hope you got it. Let me know if you have any issues. You've got my number in the group. Just stick to it. And then we've got the third question. I'm not going to waste any time. You guys know. Which of the following stakeholders of a business entity would be most interested in each of the following statement given below? Okay. The entity's ability to meet its long-term obligation. We are talking about long-term obligations. Who are we talking about? We are talking about lenders. You can also say banks, fine. Lenders, banking, financial institution, all are correct. The profitability of the entity compared to the capital invested, we are talking about, whom are we talking about? We are talking about guys, extremely sorry, this is pretty difficult to right? Because I don't have access to the open board. Something is wrong. It's investors, right? It's basically investors, right? I think I can type. I hope I can type. Uh, no, 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 no. I can't. Never mind, never mind. Okay. So now the cost of products manufactured by the entity, it is needed for managers. Okay. It's needed for the managers. Is for manager. The amount of taxes paid by the entity, it is needed for our NPP government. Exactly. So the answer is going to be lenders or banks or financial institutions. Profitability is for the investors or basically the shareholders. The cost of products manufactured by the entity is for the managers, and the amount of taxes paid by the entity is going to be for the government. Okay. Right, someone is saying happy birthday. Thank you. Happy birthday was yesterday. Thanks a lot, by the way. Right, I think most of you have basically. So why won't owner come? Yeah, profitability, you can say owner as well. Okay, owner, investor, both are correct, Umair. Okay, owner, investor, both are correct. You can say both. Okay, right. Okay, Mahdi, keep typing happy birthday. Yeah, thank you, thank you, thank you. Can we say owners or shareholders? Yeah, you can say owners, shareholders, investors, you can say anything, okay? Okay. Does lenders also mean creditors? Yes, yes, Shazia. You can also say creditors. Can we say owners for the B part? Yes, Aisha, you can say owners, no problem. Sir, treat Venum, okay, later. Right, perfect. Let's move on to the fourth question. Okay, fourth question is going to be a pretty difficult question. Let's see how far you have done it. Okay, so I don't know how good you are in accounting, but to do this particular question, you need to be like really good. Okay, to do this particular question, you need to be like super good. So let me quickly erase the board for you so that we can get started with the numbers. Again, if you ask me, sir, is it a difficult question? No, it is not that difficult. It is not that difficult, but you know, it's quite of a standard question, I must say. Okay, final accounting equation, which includes the transaction undertaken by Sahana business during the month ended 31st January, is given below, right? They have given us the asset, equity, and liability. And they are telling you, look, they are telling you the following errors were found after completing the above transaction. So basically, they are including the error. They are basically including the error in the accounting equation. Okay, so it's basically a combination. It's a combination of accounting equation and error. So you should be good with both. You should be good with both. Okay, so first one, rent paid 12,000 in January for the first quarter year ended 31st March 2024 was considered as an expense for January month. That's one error. B, depreciation for the financial year ended 31st December 2024, 6,000 was considered as an expense for January. C, return inward undertaken during January 3,000 has not been recorded in the accounts. Cost of this return is 2,000. Okay. So now let me write down the accounting equation on the board. Okay. We have asset, that's 280,000. We have equity, that is 180,000. We have liability, That's 100,000. Okay, that's 100,000. Okay. So now what's the first adjustment? Rent paid 12,000 in January for the first quarter year ended 31st March 2024 was considered as an expense for January month. So guys, look, the examiner is pretty tricky. Guess what he does? Guess what he does? He's basically buckling up the accrual concept. He's buckling the accrual concept on the first adjustment. I'll explain you how it works. Okay. Right, guys. Look, the first error is related to accrual concept. It's accrual concept. Think about it. Okay. Our year starts on, if I'm not mistaken, our year starts on yeah. Let's say not year, our month starts on 1/1/2020 and it's ends on 31st March 2024. Okay, so this is basically a month. So this is basically the start. Okay, so we are paying rent. How much are we paying? We paid, look, I'll write down here. We paid 12,000. We paid 12,000. But did we pay 12,000 for the entire month? No. We didn't pay 12,000 for the entire month. The rent that we paid is not just for January. It's basically for a quarter. So how many months are included in a quarter? 3 months. How many months are included in a quarter? 3 months. So they are basically paying 12,000, right? Basically, 12,000 rent is paid for a quarter. Quarter kiyanne 3 months, starting from Jan, which means we paid rent for January. We also paid rent for February and March. Okay, one shot knockout. One shot knockout. We are paying 12,000 on 1st of January, but the 12,000 is not just respective for the month of January. It is related to January, February, and March because this is a quarter. This is basically a quarter. So what they have done, look, out of 12,000, 1 month rent is 4,000, right? 4,000 for the month of Jan, 4,000 for the month of February, and 4,000 for the month of March. Do you get what I'm saying? 4,000, 4,000, 4,000. But did you go one after the other? I mean, did you pay 4,000 on January and then 4,000 on February and then 4,000 on March? You didn't do that. What did you do? One shot knockout. You paid 12,000 then and there at the start of January. Okay. So this 8,000 that you got, what is it? Can you consider that as an expense based on the accrual concept? Can you consider that as an expense based on the accrual concept? Right, exactly. Very good, right? These are prepaid expenses. Prepaid expenses kiyanne, these are assets. Okay, these are assets. This is the only expense that we got. This is the only expense that we got. So how much should you have shown as expense? You should have shown 4,000 as expense. But how much did you show as expense? You showed almost 12,000 as expense. Is that correct or wrong? It's wrong. You should have shown 4,000 as expense and the remaining 8,000 should be shown as asset. So asset එක අපි 8,000 වලින් වැඩි කරලා expense, it should decrease my equity නේ. Expense should decrease my equity. That should have been done by 4,000. But in this case, what did the accountant do? He took 12,000 and he minus the equity. Do you get what I'm saying? Instead of minusing only 4,000, instead of deducting only 4,000, he deducted 12,000 in equity. Is that correct or wrong? It's wrong, right? he should have deducted only 4, but he deducted 12, which means this 8,000, okay, it has deducted the equity. Do you get what I'm saying? This 12,000, it has deducted the equity. But can you deduct the equity? No, you can't deduct the equity. Why? Is that an equity or asset? It is an asset here. You should have only deducted the equity by 4,000. But you are a mode accountant. What did you do? You deducted 12,000 in total. So what you need to do, you need to add back that 8,000. Do you get what I'm saying? You should add back that 8,000 that you mistakenly deducted. Why? Because this 8,000, is that an expense or asset? It is an asset. So you add back the equity and go and show that 8,000 as an asset. So what asset is this? It's prepaid expense. Okay, here it's prepaid expense mistakenly shown as expense. Did you understand? Okay, that is the way you correct the first error, right? You add back the equity because you deducted it mistakenly. You add back the equity, and then that 8,000, is that an expense or asset? It is an expense, so you go and show that as an asset. Okay. Sir, is it a current asset? Yes, it is a current asset. Yeah. Sir, can this 8K also be called as retained earning? If not, would you mind explaining what a retained earning is, sir? Would be a greater. Umair Faisal, I shall explain you what is a retained earning, but this is not the right time. I will explain you how retained earning works. For the time being, just stick to it. Yeah. So again, I'll tell you, you paid 12,000 in total in the month of January. You paid 12,000. Out of 12,000, 8,000 is for the next 2 months. That should have been shown as an asset, but you deducted the equity. You showed it as an expense, which is wrong. So you add back the equity because you deducted 8,000 in excess. So you add back the equity and you put it back to where it belongs. So it belongs to asset, so it should be added back. Got the point, right? Moving on, we have the second tangent. Depreciation for the financial year ended 31st December 2024, 6,000 was considered as an expense for January. Okay, right. So depreciation for the financial year ended 31st December 2024, 6,000 was considered as an expense for January. Okay, again, same thing. Depreciation, right? Your year starts on 1st January 24 and it ends on 31st December 2024. It ends on 31st December 2024. Am I correct or am I bamboozling you? I hope I'm correct. Yeah, financial year ended, right? So the annual depreciation is 6,000. For 12 months, the depreciation is 6,000 for 12 months. But are we preparing the accounts for 12 months or for 1 month? We are preparing the accounts for 1 month. Look, they're asking for the accounting equation at the end of January, not at the end of December. So our timeline is 1 month. Keep in mind, our timeline is just 1 month. We are talking about 1 month. So a month depreciation should be 6,000 divided by 12 months. It should be 500. Am I correct? A month depreciation should be 500. So depreciation is an expense. So how much should you have shown as depreciation? You should have shown 500 as depreciation. But how much did you actually show? You showed 6,000. Did you understand? A month depreciation should have been included under equity. But what did you do? You included an year's depreciation. You included an year's depreciation, which is wrong. Do you get what I'm saying? So you should have shown 500 as your depreciation expense. But how much did you show as depreciation? You showed 6,000. So what have you done? Have you deducted equity less, or have you deducted in excess? You have deducted in excess. By how much? You have deducted 5,500 in excess. Do you get what I'm saying? You have deducted 5,500 in excess. Why? I'll tell you one more time. An year's depreciation is 6,000. Depreciation for the year is 6,000. For a month, it should only be 500. But what did you do? Instead of showing 6,000 as year's depreciation, you showed that as a depreciation for the month of January. You get what I'm saying? So instead of showing that as a year's depreciation, you showed that as a month depreciation. So actually, depreciation that belongs to 1 month should be 500. But you showed 6,000 as depreciation. So you have deducted equity by 5,500 in excess. So what you need to do, second point, moving to the second point, you need to add back 5,500. This is depreciation calculated in excess. Did you understand? Okay. And you should add back your asset as well, because you would have deducted the equity. You would have deducted the asset as well. So you should add back your property, plant, and equipment by 5,500, right? So that's basically the second adjustment we got, right? Very good, Zahra. I think Zahra nailed it. Very good. Right. Let's go to the third one. Okay. Let's go to the third one. So third one, what do we have? Return inward undertaken during January 3000 has not been recorded in the accounts. Cost of this return is 2,000. Guys, this is something you all know. So this is a sales return, right? A sales return was not recorded. All you got to do is to record it. A sales return was not recorded. You have to record it. That's it. You just need to record. Record it back. Done. Metana, there is no reversing. There is no amalgamating. There is no alteration. There is no curtailment. You don't want to do any of those. All you got to do is to record, because it was missed. They have missed the sales return, or they have omitted, or they have missed out a sales return from the accounting books. Now you just need to record it, right? So how do you record it? Simply, you add back your inventory. I think the inventory is 2,000. Add it back. And your trade receivable should go down by 3,000. And then your equity should come down by 1,000. What is this? Sales return loss. Sales return loss. So with that, we will be able to get our final answer. So what do we have? Let me quickly get that calculated. Okay. It's 280 plus 8 plus 5.5 minus 1. That's going to give me 292,500. 292,500. Over here is 180 plus 8 plus 5.5 minus 1. That's 192,500. And liabilities remain just the same. Liabilities remain just the same. So there you go. That's your answer for question number 4. Right. Any questions for now? First adjustment should be increased twice as 16,000, isn't it? No, Adlan, you don't need to add 8,000 twice, because they haven't, they haven't done any inverse adjustment here, Adlan. They haven't done any inverse adjustment. When do you need to add it back twice? It's when a liability is shown as an asset, or it is when an income is shown as an expense. Do you get what I'm saying? It is when an income is shown as an expense, you need to add it twice. But here, they haven't done any inverse error. It's basically equity should have been deducted by 12,000. No, 4,000, but you have deducted it by 12,000. So you have deducted 8,000 in excess. So you don't need to add it back twice. You just need to add back the excess amount to the equity as well as the asset. I hope you got it, right? So guys, are we okay with the fourth question? So then the fourth question, what's going to be our answer? Our answer is basically 292,500, 192,500, it's 100,000. It's basically third. Our answer is third, right? Right, perfect. So guys, any doubts in question number 4? Are we good here? Again, guys, to to really understand how this process works, you should be good in accounting equation. You should also be good in what do you call errors, and then you should also be good with the concepts. For example, you see option A is basically about accrual, right? And then question number B is just error. And then question number C is accounting equation. So you've got to be good with these 3 subjects if you want to excel in a question like this, right? Accounting equation should be good. You should be good at accounting equation. You should be good in accounting concepts. And then you should also be good in error, right? That's how you should be able to tackle this up, right? So let's move on to question number 5. So again, this question is going to be a pretty easy one, I must say. A business registered for VAT sold goods for 460,000 on credit, includes VAT 15%. Cost of goods sold was 300,000. Select the answer, shows the correct impact of the above transaction to the accounting equation. Just give me a minute. I'll quickly turn off my cam and mic for a while and come back. Just 1 second. Okay, I'm back. So question number 5. A business registered for VAT sold goods for 460,000 on credit, includes VAT 15%. Cost of goods sold was 300,000. Select the answer, shows the correct net impact of the above transaction. Okay, so let's go to our board one more time. Right. Look, here it's accounting equation with VAT. It's accounting equation with VAT. Okay. So guys, look, to do this question, you should know the pro forma. To do this question, you should know the pro forma. So what's the pro forma? You guys must know this. You have the cost, which is basically the inventory. Cost or inventory. Hari, to that inventory or cost, what do? We add the profit. Isn't that true? We add the profit. Once we add the profit, what do we get? We get the selling price. Once you add the profit, what do we get? We add the selling price, okay? And to that selling price, what do? We add VAT. Okay? Once we add VAT, we will either get cash or we will get trade receivable. We will either get cash or we will get trade receivable. So this is the pro forma. You guys know this, okay? Right. So now, they are giving us 460,000, okay? Sold goods for 460,000 on credit. So it's basically not cash, it's trade receivable, isn't it? It's basically not cash, it is trade receivable. So for how much are we selling it? We are selling it for 460,000. So what do they have given us? They have given us the gross figure for which we are selling the inventory, okay? So we are selling the inventory for 460,000. Okay, so this 460,000 does include VAT. Can you see this 460,000? It includes VAT. It includes VAT. So are we going to charge VAT or are we going to dismantle it? You are going to dismantle it. You're going to dismantle. You're basically going to take the VAT out. Okay. So look, what's the VAT percentage given? It's 15, isn't it? The VAT percentage given is 15. 15% is basically the VAT. Okay. So you know percentage is calculated for 100. You all know percentage is calculated based on 100%. For 100, out of 100%, 15. Out of 100%, 25. Out of 100%, let's say 75, right? So the base 100% should have been our price. Okay. For the selling price, they charged 15% VAT. So now trade receivable, it consists of both. Trade receivable, it consists of both. It consists of VAT, it consists also the selling price. Do you get what I'm saying? It consists of VAT. It also consists of the selling price. So what is the trade receivable figure? It indicates 115%. Trade receivable is indicated by 115%. If someone was to ask you why, you should be able to explain. Hey, look, we have the selling price. For that selling price, 15% VAT is charged. We have the selling price. For that selling price, 15% VAT is charged. Okay. And you know, percentage is calculated based on 100. Percentage is calculated based on 100. So our selling price should have been 100. For that 100, we charged 15%. So trade receivable consists of both selling price and VAT. Therefore, trade receivable signifies 115%. So now I need to reverse back. How do I reverse back? I know. You all know this, I guess. 460,000 is reflected by 115%. 460,000 is reflected by 115%. So if you multiply this by 100, you will get your selling price. If you multiply this answer by 15, you will get your VAT. You will get your VAT. So the logic behind this equation works like this. 460,000 divided by 115, right? Once you divide 460,000 by 115, what do you get? You get the value represented by 1%. Once you divide 460,000 by 115, you get the value represented by 1%. Okay. So 460,000 divided by 115, you will get the value represented by 1%. How much is it? I don't know. Let me show it to you. So we have 460,000 divided by 115. So 4,000 is basically, okay, 4,000 is basically 1%. Now I'm going to multiply that by 100 for me to get the selling price, which is 400,000. So 400,000 is my selling price. 30,000 is my VAT. So let me put that over here. 30,000 is my VAT and 400,000 is my selling price. There you go. Right? Perfect. Now we can find out the profit. What's the cost of the inventory? They have given us, right? The cost of the inventory is 300,000. The cost of the inventory is 300,000. So if cost of the inventory is 300,000, what's the profit? Obviously, the profit is going to be 50,000, isn't it? The profit is going to be 50,000. So now it's easy. Now it's easy. So when you sell, what happens? Inventory goes out. When you sell, inventory goes out. So I will decrease my inventory by 300,000. Why? It's this, can you see? Inventory goes out by 300,000. When you sell, inventory goes out. Okay. And how much now the trade receivable is supposed to pay you? Trade receivable is supposed to pay you 460. So now trade receivable is an asset, right? Again, my asset is increasing by 460. What is it? Trade receivable. So we are done with this, done with this. So we are left with the profit and VAT. Okay. Profit 50,000. What does it do? It increases my equity. Profit 50,000. What does it do? It increases my equity. And what about this 30,000 VAT? Let me know. VAT charged on sales. VAT charged on sales. Is that an asset or liability? Oh, guys, wait. I think yeah, the profit is 100. My bad. Sorry, it's not 50. It's 100. So that's an arithmetical issue. Don't get me wrong. Right. So here it should be 100. Thank you. Right. So exactly right. All of you are telling it's a liability. Very good, Hafsa. Very good, Zakia. Very good, Ashaf. Right. Very good. Very good. Right. Right. Yes. Here also it's 60. My bad. I'm sorry. It should be 60. And this should be 62. Sorry for that. Sorry for that. Right. So VAT is 60,000, isn't it? VAT is 60,000 and it's a liability. Therefore, my liability would go up by 60. My liability would go up by 60. So you guys seems to be knowing all these things. That's beautiful, right? That's beautiful. Right. Yeah. Thank you, Yusuf. It was basically an arithmetical mistake. I'm extremely sorry. Here it should be 60, not 30. And here also it's 100. So your answer is going to be 160 plus, 100 plus, and a 60 plus. Right? There you go. So do we have an answer as such? Yes, we do. Right? So the answer is going to be asset increases by 160 and liability increases by 60 and equity increases by 100. Your answer is fifth. Your answer is fifth. Okay. Right. Perfect. Well done. And then we have question number 6 and 7. No, Umair, I will probably finish off the class with question number 6 and 7. We are done with it. Sir, what's the VAT on sales and VAT on purchase? Hamda, VAT on sales, VAT on purchase is basically prime entry book. VAT on sales, it is a liability. You should pay that to the government. VAT on purchase is basically an amount that could be claimed from the amount that is payable. It's quite of a complicated thing. Are you right? I don't know. Are you good with the VAT part, or do you have any issues with it, Hamda? Let me know. Right. So, guys, probably I will be finishing off the class with question number 6 and 7, and the remaining questions I will discuss next week. Okay. So, question number 6 and 7. Supun Traders is a business registered for value added tax (VAT) on 20th 5 2024. What's happening? Supun is purchasing goods from Nadun Private Limited with an invoice price of 920. Invoice price includes value-added tax of 15%. Later part of goods in which invoice price of 230,000 was returned back to the supplier. On 15/6/2024, a check was issued to settle the payable amount to Nadun Limited, and this check was dishonored on 20/6/2024. So how many transactions are there? Transaction number 1, we are purchasing goods. Am I correct? So that's transaction number 1. Transaction number 2, returning the goods. Transaction number 3, issuing a check. Transaction number 4, check is dishonored, right? So the question is, select the answer respectively shows the source document used to record about transactions in the book of Supun Traders. Okay. Now, we are Supun Traders is basically purchasing goods. If we purchase goods, obviously, what is the source document? If we purchase goods, the source document is invoice. You guys know that. Okay. And then later part of the goods in which invoice price 230,000 was returned back. So you are returning back. So is it sales return or purchase return? It's purchase return, right? So if it is purchase return, what is it? It's debit note, isn't it? Right. Then a check was issued to settle the payable. If you issue a check, right, it's the payment voucher. If you check, it's a payment voucher. And if the check is dishonored subsequently, you guys know, where do we put it? We put it in the general journal. Therefore, the source document would be JV. The source document would be JV. So it's invoice, debit note, payment voucher, and the journal voucher. Answer is invoice, debit note, payment voucher, and journal voucher. The answer is fourth. The answer is fourth. And question number 7. Current journal entry to record the goods returned to Nadun Private Limited. Okay. So we are returning goods. If we return goods again, we gotta go back to the performer, right? So, okay, we are returning back to the board one more time. So this time, we are again going to put down the performer and work on it, okay? Right, look. We have the purchase return figure. To that purchase return figure, VAT is imposed and we will get the trade payable. Okay, so they have given us 230,000. Do you mind letting me know that 230,000, is it purchase return or trade payable? What do you think? The 230,000, is it purchase return or trade payable? Very good, Ashaf. Very good, Umair. Exactly, it's the purchase return or trade payable. I think Ashaf, you got to check your answer. Umair also got to recheck your answer. Aliza should recheck your answer. Hafsa is correct. Akil Ahmed is also in a position to recheck your answer. Farah, you got to recheck your answer. It cannot be purchase return. It's not purchase return. I'll tell you why it's not purchase return. Let me show it to you. Okay, look, guys. With an Supun Trader is a business registered for VAT on 20th 5 2024. They are purchasing goods. Okay, they are purchasing goods from Nadun Private Limited with an invoice price of 920. Invoice price includes VAT. Invoice price includes VAT. Later part of goods in which invoice price of 230 was returned back. So they are telling invoice price includes value added tax. Invoice price is already including the value added tax. So which means in this 230 also value added tax is included. Do you understand me? In the 230 also value added tax is included. So it's not purchase return, it's trade payable. 230 is trade payable. Did you understand? Because it includes VAT. You get what I'm saying? The invoice price includes VAT. So now, are you going to charge VAT or are you going to dismantle it? Are you going to charge VAT or are you going to dismantle it? You are going to dismantle it. How do you dismantle? So let's go through the VAT percent. It's 15%, right? So VAT percent is 15. VAT percent is 15. And I already told you, percentage is calculated based on 100. Percentage is calculated based on 100. So we have purchase return that is 100%. We have purchase return that is 100%. Okay. So 100% plus 15% trade payable consists of both VAT and purchase return. Therefore, it's 115%. So now you need to just work with math. So we have 230. 230 is for 115%. Once you divide 230 by 115, you will get 1%. Multiply it by 100 if you want to get the purchase return figure. Okay, multiplied by 15 if you would like to get the VAT figure, whichever the figure you want. Okay, so you will obviously get 230. Okay, you will get 230. So our purchase return is 200 and our VAT figure is going to be 30. Now what are they asking for? they are asking us the journal entry. They are asking us the double entry. So double entry is something that you are very familiar with. Think about it. Purchase is an expense. It should be debited. Purchase is an expense. It should be debited. Now, the purchase is getting returned. If purchase is getting returned, it's purchase return credit. It's purchase return credit. VAT on purchase is an asset. You all know VAT on sales is a liability. VAT on purchase is an asset. Okay. So VAT on purchase is an asset. It should be debited. When you purchase, VAT should be debited. When purchase gets returned, VAT should be credited. When purchase gets returned, VAT should be credited. And then we have trade payable. We have trade payable. So when you purchase on credit, trade payable increases. When you purchase on credit, trade payable increases. But this time, whatever the amount that you purchase, you are returning. So now, does the trade payable increase or does it decrease? It decreases, right? If it decreases, it's a liability. Trade payable is a liability. Therefore, you got to debit it. You got to debit it. So you should be good with double entry for you to understand and get this answer. So, what is going to be answer? It's creditor control account debit 200, VAT control account debit 30, return outward account credit 230. That's wrong. Creditor control account debit 230, return outward credit 200, VAT control account credit 200. So that's basically your answer. What's your answer? Your answer is third. Your answer is third. Right. Why is it called control account, Umair? Control account is something that you will be learning in chapter number 3. No, chapter number 4. Wait, it's chapter number 4. Yeah. Data reconciliation, creditor reconciliation, control account because you are getting the total of it. You have both subsidiary ledger. You also have something called general ledger. So the general ledger is ideally known as the control account because it consists of the totals. I think that is something I'm unable to explain to you like at this moment of time. If I get some time, probably I will be able to explain that to you. So guys, yeah, how many of you got like 7 out of 7? Is there anyone who got 7 out of 7? Okay, we've got Yazid with 5. Very good, Yazid. Yeah, Umair, drop me a message. I'll reply you. Very good, Yasmin Sajahan, 7. Very good, Umair, 6. Very good, Zikra. Very good, Ashraf. Very good. Well done, Ashraf. Ashraf got 6. Very good, Atif. Well done. It's 5, 6, 7. Very good, Hafsa Razik. Very good, Zahra. Well done. We've got Shamla, Shamha, Nufail. Very good, 6. Mariam, 5. Rifakat, 5. Aliza. Perfect. Faznia, 6. Not bad. Right. Beautiful. I think all of you have got some decent marks, all of you have got some decent marks. I think, again, it's a moderate paper. I don't want to lie. This is not a tough paper. This is kind of a medium difficulty paper. Okay. So you should be good in practicing accounting. When it comes to accounting, understanding the logic, understanding the concept is important. At the same time, practicing question is even more important, because no point of seeing your lecturer 1,000 times doing a question for you unless you sit down and take a piece of paper and practice. Okay, you won't learn anything. So you just need to practice, and always keep in mind, MCQs are going to be for 50 marks in your final exam. MCQ is going to be for 50 marks in your final exam. So don't take it as a joke. Okay, you got to work on your MCQs. And to be honest, the MCQs that we did right now, like, I'm not exaggerating, but it's not hard. Okay, it's not the most difficult MCQs you are doing. Probably towards the end of the session, we would be doing some difficult questions. Then you will understand OMG, we have a lot to think here. Okay, so we just got started with the most easiest types of questions, and not bad, you know. Mariam got 5, Shamhanufel got 6, you know. Beautiful. So most of you have got your marks on a very expected level. That's beautiful, but then again, you got to keep working, right? So, sir, is this class free till A levels? No, Umair, as I already told you, I'm going to start off my revision classes for 2025 online from January. So it was basically one of my friend's suggestion. You know, Riaz Rushad, who is basically an ICT, a popular ICT teacher in Sri Lanka. So he was basically suggesting me to start with free classes and let the students know how you teach. Let them know your product. And then if they are willing to, they will be able to get enrolled into your revision classes. So I will probably do 10 classes free, 10 paper classes free. And after 10 paper classes, this paper class will be over. And then I would probably start off with lesson-wise revisions and what do you call lesson-wise revisions, also papers. So that's how it's going to go. So it's going to be 10 classes free, Umair. I hope I answered your question. Okay. So guys, thanks a lot. It's been a pleasure. Most of you were like very attentive, gave me the fullest support in terms of answering and breaking the chat box. Beautiful. So, sir, you kind of look like a Pakistani cricketer, Muhammad Amir. Ashraf. I'm not a cricket fan, to be honest. I watch football a lot. I'm a Ronaldo fan. Then again, I'll just Google Muhammad Amir and see. Thanks a lot. So can we know when you are starting officially? What do you mean? Is it the physical classes or online classes? Good night, Yazid. Good night. Right. The revision class, Aina, I will be starting off the revision class probably on January. Okay. It's going to be a very, very effective class because I'm going to give you a paper and then I will be revising the subject. A to Z, everything will be revised. Let's say from first chapter, first, second, third, fourth Kiala, we will be going from the beginning. From accounting equation, I'll be teaching the, you know, basics and the fundamentals. And then it will be backed up with weekly papers. That's how it's going to go. And probably, Aina, for your question, I will get my revision class started from Jan. Okay. So, right. You're welcome, Aina. So, guys, thanks a lot for joining. I hope I cleared all your doubts and hope you at least get something out of this classroom. Thank you, Ashraf. It's been a pleasure. It's a pleasure to hear from you. It's a beautiful feedback. Thank you very much. It means a lot to me. Ahmad, I'm planning to revise grade 12. Grade 13 is based on the request. If the students are requesting me to start off grade 13, I will start off grade 13 online, grade 12 revision. So 13, it will go separately, the theory classes. We can get started from companies and then theory will be, no, revision will be doing for grade 12. Right. So we've got Salma, Shifan. Yeah, you're welcome. You're welcome, Rishda. You're welcome, Zara. Okay, have a good time, guys. It's been a pleasure. One more time. Yeah. Let's meet up in the next paper class. I'll send you another paper probably next Wednesday. Get it ready. And we will discuss the remaining questions. And then hopefully we can get started with the rest. You're welcome, Nahla. Thanks a lot for joining. It's a pleasure. Okay, right.